Welcome to Drill On Earnings. We have quarterly results out from Zscaler, that all-important cybersecurity company. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We cover the 50 most important companies in technology. Zscaler, one of the most important companies in cybersecurity. This is our Q4 Fiscal 2025 quarter. I don't know why they do that, but that's the way they do it. The results better than Wall Street expected again for this company. They were expected to do $667 million. They did $678. They were expected to do 76 cents in non-GAAP earnings per share. They did 84 cents. But we want to dig into the business here, not just the beat or the miss. This business is still zipping along. It's growing at 23%. Not the 50% growth we saw 2 years ago, but still 23% is a fantastic growth rate for this company. Their calculated billings were up 25% to $785 billion. They had deferred revenue up 26% to nearly $2 billion. So this company is getting really big and growing really fast. When you look a little bit deeper, we mentioned that the calculated billings up 25%, but they raised their full year guidance to $2.66 billion to be exact in revenue, $3.19 billion in billings. Their free cash flow margins of 18%. This thing is throwing off tons of free cash, and yet they're able to manage the books such that they're not throwing off a lot of profits on the income statement. Of course, keeps the tax bill low. Negative 4% profit margins, just hugging along the loss line here. Let's talk about some specific things that worked for Zscaler in this quarter. Zero Trust Exchange now secures 15 million users and processes 100 trillion transactions annually. That's people sort of logging in and using their service 100 trillion times, hitting their servers, enforcing 5 trillion policies, 60 billion threats they observed coming in. That's helping them sell big deals. We'll talk about there. They have something called their Flex program, their Flex Z-Flex. Sounds exciting. Whatever, 65 million in bookings in the quarter. One customer, one Fortune 500 customer they talked about in the call, expanded to spend over 40% from what they'd spent previously to $19 million under this new flexible spending program. And they announced a big acquisition in the last quarter, $675 million acquisition of a company called Red Canary. They expect it's going to close in August of 2025 is the latest update. They say it's going to help with the managed detection and response known as MDR in the business, the cyber business. They like their acronyms. Threat intelligence. It's going to work with AI. And AI is a big talk here because hackers are using AI to have better exploits, and these companies are fighting against that. Now, we can see it in their orders. So their book to bill really surged up to 1.2x what the revenues were. So their bookings are 1.2x what revenues were. That's one of the best numbers they've put up in quite a while, and a big improvement over last year. How did the stock react? Stock market loves this company, loves it still up 6% in after hours trading after a 53% rise in the last year. The S&P 500 right now up 12% in the last year, and yet this stock up 53%. So specifically, they talked about these emerging categories that are in their benefit. Zero trust everywhere, data security everywhere, and AI ops, security ops, using AI to look for threats as they roll in. These things are growing faster than the company average. Now looking at $1 billion in annual recurring revenues for Zscaler. Jay Chaudhry talked about, the CEO and founder of this company, who's been a guest on the Drill Down, so he's a friend of the show. Jay talked about how in April, while other companies were seeing a lot of worries, the tariffs hit, companies were really hit with a new kind of uncertainty. They didn't know what spending was going to look like, but cybersecurity, he says, is always a priority, and he even saw it in April.
We did not see a softer April. This may be because we are not in the business of selling security appliances. Overall, the spending environment remains challenging, macro is still tight, and we continue to see large deal scrutiny. Now, budgets are tight in general for IT, but for cyber, it's a little easier because cyber is a bigger priority. And even in cyber, the two areas that are high priority for our customers. Zero Trust architecture is one, and securing use of AI is two. If your project involves one of these two security offerings, and you can actually do some cost savings, the deal can get done.
So yeah, if you've got revenue attached to your work, you can get some deals done. That's how the world works. But what's it all mean? What's your big drill on earnings takeaway from Zscaler? And what's the one number that tells us a whole lot? Well, I've got that for you. So Zscaler, Q4 Fiscal Year 2025 earnings, your essential summary for this company. It was a strong quarter for this company. 23% revenue growth, at $278 million. Not the 50% revenue growth we saw a couple of years ago. This is getting to be a big business, but still growing really fast. Calculated billings growing, deferred revenue growing, earnings look decent on an adjusted basis. But I thought the most important thing was the billings growth is now going faster than the revenue growth on a year-over-year basis. Revenue is growing at 23% year-over-year, billings growing at 25%. That's super bullish for Zscaler. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.